Hi folks, Marina Stroud here. I am your product education lead. Thanks for joining us today and letting us be a part of your educational journey. Please take some time to review our previously recorded beginner and intermediate lessons found within your help menu. We want to educate members across all TradeSmith products, our newbies, and our salty dogs, those of you that have been with us for some time. If you're new, catch up with the beginner level webinars and join the intermediate lessons when you feel up to it. We include a webinar script as a reference for each presentation. And as you know, attending live will provide you with a more interactive one-on-one platform where we answer your questions on the spot. We also have a webinar Q&A after each presentation. All right, let's go ahead and check out today's topics. TradeSmith provides market outlook tools and signals to help determine the market's health and find opportunities in well-performing markets, sectors, and commodities. Today, we're going to review how our indicators allow you to X-ray each market and its component holdings. Just as the health indicator lets you know when it's time to sell a stock, right, with the red zone, our bullseye and bear's eye signals will warn you when the market tides are about to change. If you're interested in the emotions that are driving today's market, our Fear and Greed tool will measure the stock market's behavior through several indicators. The market outlook indicators and signals that we're discussing today pertain to Ideas by TradeSmith, and they're available to Ideas by TradeSmith, Trade 360, TradeSmith Essentials, and TradeSmith Platinum accounts. All right, before we get started, I need to review our usual disclaimer. The information we present today and in upcoming tutorials is for educational purposes. We're not financial advisors and cannot provide individualized advice or recommendations. We are recording today's presentation, so if you missed something, don't worry about it. You'll be able to go back and rewatch it at your convenience. Please keep your questions about the topic at hand. I can open the floor to all general questions at the end of the presentation. Great, let's get started. So with that, we're going to head to the website. One moment, please. So I'm on my TradeSmith Finance account. Just as a reminder, you're going to log into your account via finance.tradesmith.com, no matter your product subscription. Just keep in mind that I have access to the full suite of TradeSmith products with my Platinum subscription, so your site may look different than mine. While we're here, let's take care of a little housekeeping. Top right is your help menu. You can click that button and your educational resources will be tailored here within this menu. There at the top, you'll find our customer success team. You can click the folder there to expand it. And there at the top is a link to schedule a concierge appointment. That's a 30-minute one-on-one phone appointment with an agent to maybe answer your questions or give you a little product walkthrough. If you scroll down below, you'll find our TradeSmith Bootcamp and video tutorials. You can again click to expand that folder. Here you'll find at the top the registration link for upcoming bootcamps, and then our beginner and intermediate lessons are organized here as well. All right, you can reference today's presentation scripts for some more information on setting up a concierge appointment. Let's start our conversation with human emotion. You can see all influences on price action in the charts, right? Events such as earnings, news, income, statements, balance sheets, Fed announcements, terrorist attacks, wars, etc. The list goes on and on. These events affect the thoughts and perceptions of investors, and they leave their mark on the charts. Our Fear and Greed tool, which you can see here, I'm on the dashboard. You'll see it within that first market health widget. There's Fear and Greed. It allows you to see the driving emotions in today's market. And here's one place where you can find it. I'll show you the next place is going to be in the Market Outlook tab of the Markets page. But let's take a look at this detailed overview link that you see at the bottom right of this widget. So like CNN's Fear and Greed Index, this tool gives you a composite of several indicators, and you can scroll down the page that gauge the market's mood. So again, these can be found by clicking that detailed overview link. So we've got put and call options, stock price strength, stock price breadth, market volatility, even junk bond demand is here. And each card looked like it was pointing to extreme greed. So we have junk bond, market momentum, market volatility, safe haven demand, stock price strength, all point to extreme greed here on these individual indicators. The tool is also going to track, what it does is it's tracking these indicators to see how much they're deviating from their averages compared to how they normally or they usually diverge. The index gives each indicator equal weighting in calculating a score from 0 to 100, with 100 representing the maximum greediness and 0 signaling maximum fear. So as of today, February 20th, 2024, our fear and greed tool looks like it's pointing between greed and extreme greed. Now, sentiment indicators help identify potential turning points when fear and greed are at extremes. The theory states that excessive fear, right, if we're in this orange, deep orange zone, drives down share prices, and too much greed, here on the extreme greed, drives up share prices. They are usually useful when they hit extremes. When we have mild fear or a neutral, it generally doesn't give us too much of a predictive value. But it is pretty interesting to look at. You can also look at fear and greed over time with their scores through this secondary tab here. And you can go out to 1 year, 3 years, 5 years, or all historical data. Now, we don't recommend solely relying on this tool to determine the market condition. However, like I said, it's pretty interesting to view. All right, so now I want to cover our Market Outlook tab. So I'm going to scroll back up here. We can go to Markets at the top navigational header. And the first tab we're going to take a look at is Market Outlook. The default view that you're going to see is this pretty tile view, right? You have all the major US and foreign indexes here that we're tracking. You can also toggle it to a list view. So on the upper right, you can see the list view. Sometimes I prefer the list view because it's easier to see everything in one shot as opposed to the tile view. Now, a lot has changed when we compare the current market condition to last year. So if you take a look here, most of the US markets are in the green zone. We've got a lot of green. The health distribution is pretty strong. That's the percentage of green, yellow, and red zone stocks. Pretty strong for most of the US indexes, as opposed, except for the, the mid and small caps. But let me show you how you can actually look at this historically over, let's say, 1 year. So on the display on the top right, I can go click on the date box here, and I have a little calendar that pops up. So I can click on February 2024. If I want to change the year, let me click on 2024, and I'll select the year. 2023. We're in February. Let's just go back a year, right? There we go. And you're going to see it updating. Now, that's a big difference if you recall. There's a lot of red going on here. And the only two markets or indexes that were in the green were Canada and Hong Kong. Everything else a year ago was in the red. And so we're seeing a huge difference from that time frame. Let me go back to our current view. So again, we click on this date. I'm going to click on February 2023. I'm going to click on 2023 so we can pull up the year. We'll click on the current year, the current month of February, and our current date, and it'll update back for us. So this is a much better view, right? So a lot has changed again when comparing the current market health and the health distribution to last year. The S&P 400 mid cap and the S&P 600 small cap have been in the red zone for over 1 year. That's what's that 1Y plus means. And you know, the health distribution still remains relatively the same. But if we go back to the tile view, the layout displays also the bullseye and bear's eye icons. The bullseye and bear's eye signals are these green or red bullseye icons underneath the health indicator for each market. The S&P 500, ticker SPX, triggered a bullseye signal on January 6, 2023. Now we're going to talk more about the bullseye and bear's eye signals. However, to trigger a bullseye signal, the health distribution, that's again this percentage of green, yellow, and red zone stocks, the health distribution percentage of red zone stocks needs to drop below 60% only after being at or above 60%. The health indicator, or our entry signal, can also mark a bullseye signal, which is the case for what occurred for the S&P 500. So following the S&P 500 index is important, right? Because it's largely considered a benchmark for the US stock market. The S&P 500, it's in the green zone, and it has an active bullseye signal. We can also see that the majority of the symbols are in the green zone as well. Now, let's go back to the S&P 400 and the S&P 600 small and mid caps here. The S&P 400 and S&P 600 have been in the red zone, as I mentioned, since May 11th. You can hover over the health indicator button to see that information. However, if you look below, they triggered a bullseye signal later that year. Now, this may be confusing to you, and this might be a good opportunity to review the bullseye and bear's eye trigger requirements. The health indicator tracks the security's volatility quotient from a recent high close price. If price drops by more than its listed VQ, then it hits the red zone. If you follow the health indicator as your exit strategy, you would close the position and you'd wait for an entry signal, a new green light. The bullseye and bear's eye signals look at the security's health status, and most importantly, we're also looking at the health distribution. With that, I want to go to the slide so that we can clarify any confusion on this. So one moment, I'm going to hop back to the slides. So for bull markets, a bull market can trigger when one of two things happen. The health distribution percentage of red zone stocks drops below 60% only after being above 60%. And the index may still be in the health indicator red zone, which we'll get to the S&P 400 mid and we'll get to the small cap and the mid cap here in just a minute. The health indicator entry signal can also mark the bullseye signal. So again, two things can happen to trigger the bull market. We're looking at the health distribution, the percentage of red zone stocks, or the health indicator can mark that bullseye signal. So the S&P 400 mid cap and the S&P 600 small cap triggered the first outcome. The health distribution percentage of red zone stocks dropped below 60% after being at or above 60%. However, based on price action, did not trigger the health indicator entry signal. So to trigger an entry signal, we want confirmation that prices are moving higher and that we sustain an uptrend. So I've included the criteria for our re-entry rule, but basically, if the slope of our smart moving average is not strong enough, we're not going to trigger an entry signal. And this is all based on price action and trend. This specific combination of factors maximizes risk-adjusted returns, and it helps, to ensure that the stock is truly in a healthy state and moving higher before you begin to buy. So what does this all mean for the mid cap and the small cap? Well, the mid cap and the small cap indexes are not performing as well as our other major US indexes like the S&P 500, Dow Jones, NASDAQ, Russell 1000, and the Russell 2000, according to the health indicator. Okay, again, health indicator, price action, trend. If you're more conservative, you may want to put your money into the green zone markets. But if you still want to invest in these markets, small cap or mid caps, you can find stocks that are in the green zone. And I'm going to show you how we can do this in just a moment. In general, you want more than one primary index to trigger our bullseye market signal, especially the S&P 500 and NASDAQ indexes. Now let's take a look at the bears. Two things must happen for our bear market signal to trigger. One, the index must be in the health indicator red zone, and within 2 days, the health distribution of red zone stocks must be greater than 40%. Okay, so in this case, the health indicator red zone must happen for it to trigger a bear market. And within that 2 days of triggering the red zone, the health distribution or the percentage of red zone stocks must be at or greater than 40%. Okay, now let's review the charts and distribution graphs. So I'm going to hop back to the site. And by the way, all of these slides are in the script, so don't worry about taking notes. They're there for you. So you can review any of the market charts and health distributions in a few ways. The first way is we're going to click on the ticker symbol. I'm going to start us with the list view. So I'm going to go to the list view and I'm going to click on the ticker symbol. And we're going to look at the S&P 500. So I'm going to click on the ticker there and it shoots us on down to the chart. So at the top of this page, you're going to see the latest close price, the TradeSmith indicators in the middle, the health and the VQ, and the 52-week price range. Below, you're going to notice the health distribution graph, little pie graph there. Over 60% of symbols in the green zone. And then let's just scroll down just a little bit here so you can see the chart better. You will see the chart. You can go back in time, right? You can view different time frames. And then you have the fear and greed, the historical distribution or historical data for the fear and greed tool and the health distribution. So let's review the S&P 500 during COVID-19. This is amazing to show this. I want to show this to you. Okay, so I'm going to go back. Let me toggle the chart to a 5-year. And by the way, if you want to follow along on yours, you can as well. And to narrow in, you see at the very bottom of the chart, there's a light blue shaded area, which is a little replica of the chart. You can zoom in on certain areas. I'm going to zoom in to 2020. I'm going to grab the left-hand side and just kind of bring it in just a little bit. So I'm just scrunching it in like a little accordion. I'm bringing it in. I want to bring this to full view so we can look at what happened during this COVID. So we triggered, there's the red bullseye signal. We triggered the bullseye signal on February 27, 2020. COVID-19 was declared a pandemic by the World Health Organization in March 2020. So our signals, as you can see, warned members that it was time to exit the markets. At the bottom, let's see, I hover around here, March 23rd, 2020, look at that health distribution graph. Over 97% of the S&P 500 stocks were in the red zone. That's crazy. So when most of an index's component stocks are in the red zone, it tends to bog down the market. It's like running on the soft sands of the beach. You're really not getting very far very quickly. But it was not long lasting, and we did recover on March 27th. It's a little hard to see, but that green E bubble, you'll see above it is the little bullseye signal. On March 27, 2020, the bullseye signal marked by the health indicator, the re-entry signal, that's that green E bubble. As the price of the S&P 500 steadily rose from this moment, right, the percentage of red zone stocks, you can see the sea of red grew a little bit lower, right, as prices moved steadily higher. I wanted to show this to you because this is powerful stuff right here. Imagine having this information before the markets tanked and seeing this number of this percentage of red zone stocks it just blows my mind. So I wanted to make sure that you can see this as well. So let me show you the second approach to viewing a chart, and that's from our tile view. So I'm going to go back up here and we're going to toggle it to tile view. The information is the same, but you also have some additional information. The site routes you to different areas of the program. So when you're on the tile view and you click on the S&P 500, for example, it takes you to the holdings tab of the stock analyzer page. So within this holdings tab, let me scroll down just a bit so you can see. You're going to see the number of component stocks for any given market. That's on the far left. The health, stock rating, and trend distributions there at the top. You can sort any of the column headers below. For example, if I want to just focus on the S&P 500 stocks that are in the green zone, I can scroll down and take a look at these holdings. You can also click on the More Details button there to review the graph again. It's not as big as the other graph that we were looking at, and you don't get as much detail on it as opposed to the list view, but you still have this information. You also have the historical or the distribution graphs for the health, trend, and stock rating, and fear and greed as well. And then the third way is just by going to the chart tab. So I can go to chart, and we're here on the chart. You just want to make sure that your market signals are enabled within your chart settings. So from chart, we go to open chart settings, and you want to make sure here under events, market signals is checked. Then we can go back and review the same chart that we were looking at. And this one, it may provide a little bit more information as well. It might look a little cleaner. Okay. All right. So how do we find well-performing component stocks? I showed you that we can go to holdings, right? And we can certainly sort here the health column, and we've got a list right here, but there's an easier way. Let me show you. This is super cool. So if we go back to markets, I want to be on the list view. So toggle that sucker to the list view. And from the list view, you see these little blue drop-down triangles? Click that and you'll see view components. So I'm going to go ahead and click that. The site is going to route us to the screener tool where we can add additional filters to narrow down our search according to our preferences. We can even include the S&P 400 and 600 markets. So let's go ahead and do that. I want to show you. So under the markets filter, we'll hit that little plus button. We'll add mid caps and small caps. And I want to keep asset type. That's already stocks. We don't have to add that there. Now let's pause here. I want to duplicate the TradeSmith Finance tab and review the top performing sectors as well. This is how we can put this all together, folks. So I'm just going to here right click, duplicate my internet tab. Then I'm going to go back to markets at the top header. Let's look at the S&P sectors. We haven't looked at these yet. And I like the list view. You may decide what's your preference, but to see everything at one shot, I think it's easier to toggle it to the list view. So what are our top performing sectors? Well, it's pretty easy. They're all in the green. We have energy, financials, industrials, information technology, consumer discretionary, and communication services. They are in the green zone, and their holdings are also, most of their health distribution is in the green, which is fantastic. That's what we want to see. Now, just as a side note, energy has been kicking butt for a long time. Let's look at the sectors a year ago. Again, we can click in the date field. I'm going to click February 2024, click on 2024 so I can change the year. We'll click February and February 20th. So a drastic view, right? It's a different view from what we are today. You can see energy has been in the green zone for a year at least, right? And heavy distribution in the green zone. Let's see, about 78% right now. It has decreased to about 53% of its components in the green zone, but it's still performing well. We have also consumer staples that's been in the green zone as well. All right, let's flash back to our current time frame. Click on 2023, change it to 2024, February, and today's date. Okay, it's a better view today, I would say. So now we're going to go ahead and update our filters. So this is, we're going to start having fun here. Let me go back here to our first tab. We're going to click on Manage Filters here on the upper left, and we're going to add sectors right here. I also want to include health status and trend. This is a very simple way to find the top performing sector stocks that are in the green zone and are trending up. So we've got all of that checked. I'm going to go ahead and hit save and close. And we just need to add our preferences. So let's go green zone, trending up. We've got the markets set up here, S&P 500, mid cap, small caps, but we're going to be smart about our mid caps and our small caps. We're going to make sure they're in the green zone and trending up. Our sectors, we're just going to go ahead and select our top performing sectors. We've got communication services, consumer discretionary. Where's energy? There's energy. Financials, industrials, and information technology. All right, so we have all of our top performing sectors included. Now we just hit Run Screener. Now, this is a simple approach. However, you can include additional filters based on your preferences. As you can see, we have 100 results. We can certainly add additional filters here to narrow this down just a bit. You can also, if you want to focus on medium risk stocks, you can sort the VQ column right here. You can sort any of these columns either alphabetically or numerically. You can also, if you want a little dividend there, you can focus on getting rid of all the stocks that don't have any dividends. You can sort it by the dividend yield. There's a lot you can do as far as the sorting. Just make sure you know that there's a bar here, a horizontal bar at the bottom that allows you to scroll to review additional information. So we can certainly also narrow this down by VQ or risk, right? If we open this up, we can certainly include this as a filter. We can also include the trailing dividend yield as a filter as well, or any other filter that you would like. All right, let me see if there was something else here that I wanted to cover. Nope, that's about it for today's lesson. If you want to save this screener, you can always save as new right here. It'll automatically save all of your filters so you can keep coming back to run the same filters. You can also, here at the very top right, print and export. If you wanted to add this to a basket or a watch list, you can select all of the tickers by clicking that top selection box, and you can save it as a basket. You can add this to an existing basket, or you can create a portfolio as well. Before we go, let me go ahead and recap here, summarize what we've covered today. Today, I showed you how our risk and health indicators can help you quickly assess the health of the major U.S. and foreign markets and sectors. You can toggle between the list and the tile view, depending on what information is important to you and how you want to view the information. The tile view provides a nice view, gives you the health, the bullseye or bear's eye signal, along with the health distribution. And remember, when most of the stocks that comprise an index are in the red zone, it tends to bog down the market. We look at our bullseye and bear's eye signals and the criteria for each trigger. Those slides are in today's presentation script if you want to reference them. Our market outlook tools will help you scan for opportunities in various markets or sectors with the help of the screener tool. Again, we went to the list view, and through the view components, we were able to look at that. You can view the same feature with the sectors as well. If we go to list, we can also view components there. You can also check out commodities. We didn't talk much about commodities, but you can review some key commodities and the health of these commodities. I'm seeing a lot of red except for gold, silver, and live cattle. So, but you certainly have all that information. 1 second, we got some housekeeping. I want to share some information about our plan specialist, and then we'll kick off our live Q&A. If you're interested in our many products and services, please give our plan specialist a call and speak to one of our knowledgeable plan specialists. They're going to help guide you in the direction that works best for you. We want to help ensure that you have the right mix of products and services to maximize your needs and investment style. And if you do decide to add an additional service to your plan, let the plan specialist know that you attended a bootcamp training session for a special offer. All right. Thanks again, folks, for joining us. If you have any questions, please don't hesitate to contact our dedicated customer success team. On February 26th, Kristen is going to cover broker synchronization and troubleshooting tips. So please feel free to join her there. Anyone is welcome to attend all boot camps, regardless of your subscription level. Please feel free to register even if you can't make it. We'll send you the webinar recording if you register to attend. Alrighty, folks, thanks again for joining us and letting us be a part of your educational journey. Until next time, bye. All right, folks, back with you. I'm going to hop back to the site and we'll cover some questions. Let me make sure I'm sharing.
Yeah. The first thing I'm going to have you check on is something, I think it's broad for all of us. I'm experiencing, so some of our members, I don't see anything in the product feedback channel or sync or wherever we submit errors, but I want to see if yours is doing the same thing.
Okay.
So when you save a screener, it's saying, something went wrong, try again.
All right, let's do.
So let's see if it does it for you.
Let's do date. Let's see. Oops, something went wrong. Please try again. Yeah, there is maybe something wrong.
So for you too, okay.
Let me just do a text. Yeah, okay. So we'll have to report that.
Yeah. Okay, thank you.
Thanks for bringing that up.
Yeah, definitely. All right. On the charts, when you were going through in the markets tab on the charts, like you could pick any of them. Peggy would like to know, what does the exclamation points mean on the stock price line?
That's a good question. So these are referring to other market signals so let me click. Does it show on this one? It should show it on all of them. Yeah, so this is confirming a down pattern signal. And I have the specifications, market signals. Let me pull this up real quick. Our development team, I didn't talk about these because I believe our development team is still kind of reassessing these. So I didn't really want to talk too much about them. But I'm going to share the information that I do have. So let's review the signals that mark possible corrections or declines in the market, starting with the correction signal. So there's a red diamond with an exclamation. And so this marks a possible decline of 10% or more. So we're looking at, this is the S&P 500 on February 24th, 2020, that we had a correction signal. So this indicates a pullback of 10% or more, and that a bear market may be approaching. It's like a preemptive, kind of like prepare to take cover. So that's what that indicates. And the one that you're talking about is this down pattern signal, the yellow bubble with a black exclamation. So this is a down pattern signal that may indicate a pullback of at least 2%. It's not that as significant as the red diamond with the exclamation. Please do not take any defensive action on these. The down pattern signal tells us that the market may be overpriced and we will likely see a minor correction, but there's no need to panic. So here's like an overview of the signals. And if you'd like, I can add this to the FAQs just so you see what it is. Great question.
Okay. Sorry, I was typing some things. All right, let's see. We didn't really have much questions. Let's see here. Next one, excuse my dog, sorry.
Is he in the room with you?
No, he's out there, and every time like someone comes to deliver something, he just starts barking.
Oh, it's okay.
He barks loud. Can you review how to how do you get to the pie chart one more time?
Yeah. So let's go back to markets. And this one is through the list view. So you're going to have to kind of play around with it to see which views you like best because you get different information depending on the view. If I'm in the list view and I go click on the ticker symbol, it scrolls us down and then it shows us, is this the pie view you're talking about?
Yeah.
And you have the chart. You can go back in time. Like we saw, I went to the 5 years and then you have, to be honest with you, I don't really pay attention to these little down patterns. If I see, the red diamond with the exclamation, that I would be a little bit more alarmed. But specifically, the bear's eye and the bullseye signals are where we need to pay attention to, and we alert you on these if you have ideas by TradeSmith.
Perfect. Can you show Phil where to download his portfolio?
Yeah. So we're going to go to My Portfolios at the top navigational header. Then you're going to go to the Manage tab. And from here, you'll see a green Add Portfolio button. You can click that, and you'll see 3 ways to add a portfolio. You can link to broker. And from here, you'll see that we use Yodlee FastLink to import your brokerage accounts. It's a bank level security program that we're using. You hit continue and you'll see the most popular brokers pop up here. If yours is not here, you can simply search for it and select it from the menu. Oh,
Awesome.
I'm about to sneeze. 1 second.
You're fine. Bless you.
Ah, couldn't be avoided. I tried.
All right. Rick would like to know, what does 2VQ alert mean?
Where did you see that? Well, the 2VQ alert, let me just pull this up here. So if you're wanting to set up a 2VQ alert, let's just click on any one of these tickers here. It is an alert here that we developed so that you can add shares to a winning position. So instead of, doubling down, why not add to a winning trade? So here under price, you'll see the 2VQ. So when price has moved up by 2 times its listed VQ, you would get an alert. And then you can decide if you want to add additional shares or additional holdings, shares to your holding. There is a boot camp on the 2BQ alert. If you are interested, you can go to the help menu, go to TradeSmith Bootcamps, and it should be an intermediate lesson. So you'll click intermediate lessons. It's intermediate because it's not telling you to get out. It's actually telling you to add more shares. And it should be closer to the bottom there, doubling up on your winners, 2BQ. I haven't updated this webinar because nothing has changed as far as the 2BQ alert. So everything there is pertinent and still valid. All right. Great question.
Mm-hmm. Okay, I'm not on mute because I was typing, so I muted myself so I didn't interrupt you. But Tony would like to know, what is the difference between predictive alpha prime options and options 360?
So predictive alpha options is based on our NE software, right? Our machine learning software system. Predictive alpha can project, and I think they changed it to price ranges too. Let me look and see.
Yeah, they did.
Versus an actual price, they've changed it to price ranges. So you can see here, you'll see well, it'll show a projected price, and then you have this kind of range of where price can potentially go. So within the next 21 trading days. And predictive alpha options also, so it uses this system, right, to project prices that are, 21 trading days out with hundreds of technical and fundamental indicators. But it's also, we have two analysts, John Jaggerson and Wade Hansen, that also provide these recommendations. So they're utilizing our system tools with their expertise and knowledge in options trading in the markets. They are providing income option trades for you. Now, options 360 is like you're driving. You're steering the wheel, you're driving, you're in command. Options 360 is our premier options program platform based on our strategies. It is not utilizing predictive alpha. It is based on our options strategies and algorithms. But with options 360, you don't have someone recommending trades to you necessarily. We do have, as part of the options 360, you have constant cash flow that also provides, biweekly income trades. You have infinite income loop, which provides sell put trades that go out up to a month. And then you have every Monday, I believe they provide weekly income strategies and other option trades based on our strategies, which can be found under opportunities. So here are our strategies. We have sell puts, sell calls, the buy right covered calls, and buy calls. With the predictive alpha prime or predictive alpha options, let me see here. I'm not sure. I believe it's just I don't know if it's just sell puts or if they've expanded out to other types of trades. I see one trade here that's doing pretty good for T-Mobile, but I don't see let me go to, I believe they're just sell puts for now. Yeah, it looks like they're sell puts. So it's the focus is income primarily. But with options 360, it just depends on what your needs are, you know? Are you interested in income and utilizing machine learning to kind of help predict prices, topped with the expertise handholding of John Jaggerson and Wade Hansen? Or do you want to fly a little solo? Just a little solo, I say, because we do have Mike Burnick, who is our Options 360 guru. He provides the constant cash flow recommendations. These again are sell puts. But you have other tools here. So if you're interested in other option strategies, not just the sell puts, this might be the route to go. You have our system here that kind of tells you which one is a potential good trade with the probability of profit, which tells you the success of the options trade. And if you want to learn more about each of these respective programs, I would check out our boot camps. So if you go to the intermediate boot camps, there is a welcome to Options 360. That way it gives you a good overview of our options program. We don't have a tutorial on options, the predictive alpha options, because it's a kind of a newsletter. So it kind of falls in that gray area. They utilize the tools, but it is a predictive, it is a newsletter. It is one of our newsletters. I wonder if they go to tradesmith.com, if there's.
So Tony said, should predictive alpha options include the option tab and stock search results window? No.
That's a good question. I don't know. I'd have to log out. Let me log out and test this theory and see what you get.
Yeah.
Let me see. Predictive alpha options. There's predictive alpha options. Let's see. I can give you a quick little tour also if I'm logged in. They have their own little WordPress site. Come on, log me in. There it goes. Okay, so predictive alpha options. Here they have videos, updates and alerts, their portfolio, special reports, resources. They have an options 101 masterclass. And John Jaggerson and Wade Hansen are great teachers. Videos. We can also access the site. Come on, it's working really slow right now. Okay, let's go to TradeSmith Finance. They have this also. This is the alpha spikes overview. This is the different zones, but the different trading zones. So with predictive alpha options, you would have access to this zoning tool. So you can search for a ticker, and based on the underlying asset, it will tell you which type of option trade is the most appropriate to take on that tool. And you have guidance that's Wade Hansen and John Jaggerson. We can go to TradeSmith Finance. Let's see what we have here. This is just predictive alpha options. So this is like as if I only had predictive alpha options. You have the dashboard that shows the zone, right? The zones, for example, Tesla. You could do buy right covered calls, sell puts, or bull spreads. You also have the top 10 bullish and bearish stocks. You have access to my services where you could look at your TradeSmith newsletters and our affiliate or partner newsletters. You have the calendar if you're interested in searching for specific corporate actions, upcoming earnings, for example, dividends. And then let me see on TradeSmith Finance or tradesmith.com if they have like an overview of these products. There's AI, predictive alpha prime, and predictive alpha options. View product details. Doesn't really give me much, does it? Well, that's a swing and a miss. Visit website. Takes me back to this site,
Yeah, same.
but I already have a login, so you wouldn't see this. If you have questions that I have not answered with concerning predictive alpha options, let me know. And I can,
Tony did say, can you search for a symbol and look at the tab you have available for predictive alpha options?
yeah, which ticker do you want to look up?
What ticker, Tony? MCO.
It doesn't let me do it here. This one is not the search for ticker. We'd have to, let's go back to the site and let's go, no, it doesn't let me search here. How about, but here it does.
Mm-hmm.
So let's go MCO. Because remember, this is specifically for predictive alpha options. And so for MCO, we've got zone number 3. We could do buy right covered calls, sell puts, sell straddles, or bull spreads. Let me see if there's any options available. Find options. Nothing. Nothing on that. And that just means that there's nothing there that matches our strategies.
Okay, perfect. He said thank you.
Yeah, if you have any other questions regarding PAO, let me know. Sorry, I wasn't really prepared for a PAO question. Hopefully I was able to
Yeah, you did good.
you can jive that one.
Yep, all good.
Whew.
Uh, that's all the questions I have, unless I missed any. Speak up now or forever hold your peace. I don't see.
Going once, going twice. So
That's that's all
well,
I saw. A couple people I'm following up with because some people were missing the help button, so I'm just going to send them an email of how to clear
oh,
their
okay.
cache and stuff. But yeah,
Gotcha. All right. Well, I appreciate everyone's time. Thank you so much for joining us. Kristen, thanks for your help as
oh, you're
always.
welcome. Mhm.
I will update the script to include the little bit of information on the other signals that we didn't cover today. One of the top 10 in predictive alpha, top 10 Adobe, latest close 546, predictive alpha prediction. Okay, I should have it on here.
At the top, yeah.
Yeah, at the top, 546. Looks like a projection of a little over 7%. Did you have a question on that or you just wanted to look at it? You can click on the ticker symbol from there by March 19th. Yeah, that's a huge jump, isn't it?
Mm-hmm.
Alpha. We
Good.
should keep an eye on this one, huh?
For sure.
Look at that. Look at that cone.
It's awesome.
Yeah, just as an example. Mhm. Alrighty, folks. In that view, you show the options tab. Yes, you can go here to options. For example, if you wanted to find a sell put for Adobe, we can go further out. So it was March 19th. So we want to stay around this time frame, right? We got earnings coming up. Let's see. Got to be careful of that too. So you can click and see which one might be a good match for you. Let's see. Wow. We just have to be careful of the expected earnings though.
Mm-hmm.
But you have to have, you're correct, Tony, you have to have a 360 subscription.
Mhm.
And Roger, I'm gonna, as soon as we get off here, I'm gonna send feedback to our development team regarding the screener, and they'll just get that updated. I'm sure it'll be updated, if not by this afternoon, but probably by tomorrow morning.
Yeah.
They're pretty quick about fixing those little glitches. I don't know why. They might be working on the screener tools.
Yeah. Sometimes when they're working on something, it will do that.
Mhm. Alrighty, folks, thank you so much again for joining us today. If you have any questions, please don't hesitate to reach out to us. I hope you have a good rest of your week, and we'll see you all the next round. All right. Take care. Bye,
Bye,
Kristen.
everyone.
Bye.
Bye.